Hello everyone, welcome to my YouTube channel. This is the recording for skills at the rate 100 where for 100 days we are bringing for you 100 different speakers from all over the country.
The speaker is CA Geetanjali Jojare and the topic is ITR filing for futures and options trading.
So now, what are we waiting for? Let's go.
Hello everyone and welcome to the 51st session for skills at the rate 100. We have thankfully completed 50 sessions with the support of everyone from the teachers, from the participants, everyone is supported and we have completed 50 sessions. So today's session is really very special. It is the 51st session and we have a very special speaker from Pune. CA Geetanjali ma'am from Pune. She has completed her chartered accountancy in 2012. So she is having over 10 years of experience specializing in direct, indirect, international taxation and financial management. Also, she has done MCOM from Savitribai Phule Pune University in April 2008 and also having many post qualification courses. So thank you so much, ma'am, for accepting our invitation. And we are very excited for one topic which has lot of confusions. So 35 participants have already joined and we are very excited, ma'am. Over to you.
Yeah, thanks, Lokeshji. Thanks for giving this opportunity. So, as the introduction is given by Mr. Lokesh, I am not spending time on this, and we can go ahead for the session. So, the topic which I have chosen is the ITR filing in case of future and option. So, am I audible properly, or?
Yes. Perfect. Your screen is visible. You are audible. Everything.
Oh. So there are lots of complexity which is involved in the future and option, particularly with respect to the calculation of the turnover, how the turnover will be calculated for future and option trading. Then second is the how whether it will be classified as a capital gain or whether it will be classified as a business income. So I think so there are lots of question in the minds of the audience that how the ITR filing is done in case of future and option. So we can go ahead, and so the confusion can be removed. So this which in this PPT I have covered the what is the meaning of future and options. So it is the basic. I have taken the what is the definition which is given in the Income Tax Act. Then it has also the reference to the Security Contract Act and the taxation of how the taxation of future and option as per the Income Tax Act. What concept of turnover, applicability of tax audit, presumptive taxation. So again, this is confusion whether we should go for presumptive taxation for the future option or not. So by the end of session, you will come to know which is better for your clients and some other important points which we should keep in mind. So first of all, we have to, as we are looking after the tax aspect, so we have to first go to the basic definition of the security. So security has been defined under the Income Tax Act, under section 214. Explanation 2B defines it as the security have the meaning which is given under the Security Contract Act. So we have to refer for the purpose of definition of security, we have to refer to the Security Contract Act 1956. So a Security Contract Act has defined this as the securities, which includes the, as we know, the shares, scrips, stocks, bonds, debenture stocks, or other marketable securities. Also, it includes the derivative. Then it includes the units of mutual fund, which these are the general terms we know that shares, derivative, and mutual funds are the securities. But also there in this definition, some other items has been included. That is the you can see here IB units or other instrument which is issued by the collective investment scheme. So as of now, this collective investment scheme is put on hold by the SEBI. So SEBI, as per SEBI rules, it is not allowed to issue the collective investment scheme. Particularly, this is with respect to the we can say cheat fund, nidhi company, such kind of schemes are earlier operating in this, but now it is as of now it is not in practice. So you can ignore this. Also, the security receipt, which is issued under the securitization and reconstruction of financial asset. So this covers the NPA, which are issued in the form of the security receipts. So this is also in general, we are not going to cover here. So our it also includes the government securities and the such other instrument, we can say the general category, which is mentioned or declared by the central government to the security, and right or interest in security. So for our purpose, the most important definition is the shares, derivatives, units of mutual schemes, and the rights or interest in securities. So what is the derivative? So derivative is defined in section 2AC of the Securities Contract Act. Again, we have to go to the Security Contract Act. It is not defined under the Income Tax Act. So derivatives includes the security or contracts which derive its value from the underlying shares or loan or prices or index of prices. As we know, there are lots of derivative, like we can say Nifty 50, then Bank Nifty. So this kind of, or even the shares are also, we are having the derivative for the equity instruments, equity shares also, like company wise. It also includes the commodity derivatives. So and such other instruments as declared by the central government. So it covers the general part. If the in future government wants to include anything which the new instrument is issued, then it can come in this category. Again, we have to refer to section 2BC to know the definition of the commodity derivatives. So for commodity derivatives, it is given that it is the contract for the delivery of such goods as may be notified by the central government in the official gazette, and which is not a ready delivery contract. And the for differences which derive its value from the prices or indices of prices. So it is same as the normal derivative. Only thing is that it covers the commodities. So like dal, pulses, and all this kind of commodity. Even the metal is also covered here. Crude oil is also covered. So particularly the derivative, you have to understand that it is the contract which derive its value from the underlying asset. So underlying asset may be shares or the loan or index or any kind of instrument which is mentioned here. Again, what is the ready delivery contract? So which is we have referred in the earlier slide, that is the commodity derivative. So a ready delivery contract means the contract which provides the delivery of the goods and payment of price thereof, either immediately or within a period not exceeding the 11 days from the date of contract. And it is subject to the conditions of the central government. And government has notified this by by way of notification in the official gazette. So the notified commodities are given in the notification number 3068 E and 1002 E, which includes like the cereals, pulses, then oil seeds, spices, metal, and precious metal. So these are the commodities which is notified as the commodity derivative, commodity derivatives. So the next topic, am I going too fast, or is it my speed is good?
Ma'am, it's okay. I think if anyone has any doubt, you can write in the chats. You can unmute yourself.
Okay.
I think till now it is okay, ma'am.
Yeah.
Yeah, speed is okay.
Okay, thanks. Right, earlier we have seen the definitions, which is as per the Act, Income Tax Act and the Security Contract Act. Now we are going what is the future and option, that is the in general parlance. So the future contracts is the agreement to sell or buy the asset at a predetermined price on a specific future date. So as you might be aware that mostly the future contracts are undertaken in case of the commodity, currency, stock, index, and interest rate. So the agreement is entered to buy or sell the asset at predetermined price. So today the price will be determined. I'm looking after one of the stock which is traded on the stock exchange at the rupees of 500, and I am of the view that in future the price is going to be 550 or 600. In that case, I will go for the future contract, and based on the buyer seller action, buy or we can say volume of the number of buyers and sellers, plus the based on the market conditions, predictions of the um, market, and also the time, based on the time factor, the price is determined, which is the premium to buy that contract, that is a future contract or the option contract. So it is particularly for the future date. The square off has been done in the future date, but for that, based on the today probability, we are entering into the future or option contract. And what is the option contract? So option contract is the financial contract that gives the buyer the right to right, but not the obligation to buy or sell the asset at a predetermined price and before the specific date. So here option, in option contract, it is safe as here buyer is having the right but not the obligation. So if the position is favorable, the transaction is favorable in future, then only he will exercise the option. Otherwise, the option will get lapsed, and whatever the premium which is paid will be cost to that option buyer. Or in case of option seller, it will be the premium will be his income. So what is the types of options? So there are two types of options, that is call option and put option. So particularly it is based on the buyer's we can say anticipation, whether the market will be bullish or bearish. Based on that, generally the call option or put option exercised by the buyer or seller. So if the buyer is having the view that it will be bullish market in future, in that case he will go for the call option, and he will buy the call option. So it will be at the strike price, which is trading on that particular day of transaction. And for that buying that call option, he has to pay the premium to the market, and that premium is going to be the cost to the buyer. So buyer will exercise the option only if the market price is higher than the strike price. So I hope everyone must be aware of the what is the call option or put option. Hello.
Basic idea we are having, ma'am. Basic idea. Yes.
Yeah. So okay. So I'm just taking a small example. For example, I have purchased the call option for in case of one of the Nifty 50, we can say. I have paid the premium of rupees, we can say 50 rupees. And I have current exercise price is 200. And I am of the view that the price will go to 250. So sorry, strike price is 200, and I am of the view that the price will go to the 250. So I am buying the call option. So in that case, I am paying the premium which is cost to me. And if the market price in within 1 month or before the expiry of the contract goes above 200, then only I will exercise price, because I will buy that at the rate of 250 and sell buy at 200 and sell at 250. So I will be having the gain of rupees 50 in that case. So only if the market price is higher than the strike price which I have chosen, then only the buyer will exercise the option in this case. So in opposite will be the position in case of the put buyer. So in case of put buyer, he will also do go for the put option only in case of the bearish market. So he's getting the right to sell the strike price. So generally call option is you are buying that stock or the derivatives, and in put option you are selling that. So in case of the put buyer will exercise this in case of bearish market. He is having the right to sell at the strike price, and for that he is paying the premium, so it is going to be cost. And he will exercise the option only if the market price is lower than the strike price. And in case of the bearish market, call seller will go for the will opt for the call option. In case of bearish market, he has the obligation to sell at the strike price. For that, he will receive the premium, and if the option is exercised by the buyer, then the gross loss will be selling price minus market price plus premium received. So this is the we can say the highest risk is there in case of call seller, because if there is a much difference in case of the strike price and market price, then there will be huge loss to the call seller. And reverse will be situation in case of the put seller. I'm not getting much into that because that is not topic of the day. Just for the understanding, I have put this. We might think that the derivatives transaction is a speculative transaction. So for that, we have to go to the definition which is given in the Income Tax Act. Section 43 defines the certain relevant terms which are important from the angle of the profit and gains from business or profession. So for section 43(5) defines the speculative transaction, which means the transaction in which the contract for the purchase or sale of any commodity, including stocks and shares, is periodically or ultimately settled otherwise than by a actual delivery or transfer of the commodity or scrips. So basically, the contracts which are settled without the actual delivery of the commodity or scrips is termed as speculative transactions. So particularly this type of transaction happen in case of the intraday transaction, because in that case there is no actual delivery of the contract, only the trader buys the commodity. For example, in morning at 10 a.m. he buys the commodity, and before 3:30 he sells the commodity. So there is no delivery of the underlying asset, and in that case it will be termed as a speculative transaction. So particularly intraday trading is covered in this speculation activity. So also now we must be of the point of view that in case of derivative also there is no actual delivery of the contract if we exercise the option or future contract before the expiry. In that case also there is no delivery of the contract. So we might think that it is also covered in the speculative transaction. But to clear this confusion, you have to go to section 43(5), which defines what is the deemed to be non-speculative transactions. So in non-speculative transactions, following has been covered. That is the forward contract in case of the raw material or merchandise for actual delivery of goods or goods manufactured by him or merchandise sold by him. It also covers the hedging contract, forward contract, hedging contract. That is the contract in respect of stocks and shares entered into by the dealer or the investor to guard against the loss in his holding of the shares or stocks. So particularly point B covers the hedging contract. You must be aware that to protect the loss, if someone is thinking that the stock price will go down, or it will in that case they also turn into the reverse contract to cover his particular position, so that if the reverse situation happens, he will at least be able to cover the loss which is there in his or her first contract. So it will nullify the effect. So particularly the risk which is covered by the hedging is covered in point B. C covers the contract entered into by the member of the forward market or stock exchange in the course of any transaction in the nature of jobbing or arbitrage. So forward contract, hedging, and arbitrage are the non-speculative transactions. So it is out of the speculation business. So another point is the now it is particularly important for our interest is that the eligible transactions, which is in respect of the trading in derivatives. So trading in derivatives, which is mentioned in section 2AC. So earlier we have gone through the definition, section 2AC, what is the derivatives, and also the eligible transaction in case of trading in commodity derivatives. So normal derivatives and the commodity derivatives both are covered in the non-speculative transactions. So because in this case also, in case of derivative also, there is no actual delivery of the underlying assets. So to clear out this confusion, it is covered in the deemed to be non-speculative transactions. So the income from trading future and options on the recognized stock exchange, like the equity, commodity, and currency, is categorized as a non-speculative. So here you have understood that eligible transaction is mentioned. So what is the eligible transaction? So all kind of transaction in the derivative will not be covered, only the eligible transaction. For that, you have to go to the definition which is given. That is the eligible transactions, which is means which the transactions which is carried on the recognized stock exchange. So recognized stock exchange is also defined in the Security Contract Act. So only the derivative contract which are carried out through the recognized stock exchange, that only consider as a non-speculative. Otherwise, if it is not through the recognized stock exchange, then it will be speculative transaction only. So what is the recognized stock exchange? That is covered in the next slide. So section 2F defines the recognized stock exchange. So there are particularly six stock exchanges which is recognized by the SEBI, that is BSE, Kolkata Stock Exchange, Metropolitan Stock Exchange, Multi Commodity, National Commodity and Derivative, and National Stock Exchange of India. So particularly we know BSE and NSE only, that is covered in first point and sixth point. But other commodities like commodity derivatives are traded in the Multi Commodity Exchange of India, MC, ELS, ELI, EI. So these are the stock exchanges. Only the derivatives traded on this will be covered. So how to determine the turnover of derivatives? So particularly this has been defined, and you can refer also to the guidance note given for the tax audit. Section 44AB defines the turnover. So in that, the turnover of derivative is determined as total of favorable and unfavorable differences shall be taken as a turnover. So what is meant by favorable and unfavorable differences? So if you have purchased the derivative at 1,000 rupees and you have sold that at 2,000 rupees, so it will be a profit of 1,000. And in case you have purchased for 500 and sale for 100, then there will be 400 will be loss. But now in determining the turnover, you have to consider that negative amount also as a positive amount. So here the turnover will be 1,000, that is profit in the earlier transaction, and the loss of rupees 500 in second transaction. So total turnover will be 1,500. So you have to take the absolute amounts and not the negative amount. You have not to take. You have to take the absolute amount to define the turnover. Also, the premium which is received by the in case of the sale option is included in the turnover. However, if the premium is included in determining the net profit, that is in the first point, then there is no need to add it separately. So I'm taking the definition. First, we will clear this definition, then we will go for example. So to have the better understanding of the turnover, how to determine the turnover. So third point is the in respect of the reverse trade enter, means if you have entered the position, one position you have taken, and say against that you have taken the reverse position, that if you are assuming that in future the prices is going to be increase, and so you have taken one kind of trade, and to we can say to reduce the risk, you have taken this for the same amount, you have taken the reverse trade, In that case, you have to take that difference also as a part of turnover, because otherwise it will have a nullify effect. You're taking one transaction and reverse will be the transaction. So, but you have to consider that also in the while determining the turnover. And in case of open position at the end of the financial year, for example, on 31st March, you have entered into one of the option or the future contract. And on 31st March, the position was not favorable and you have not square off that position. And that position is open. In that case, that transaction will be covered in the subsequent financial year when that transaction is actually squared off. So you need not worry. You have to just ignore the transactions and the open position will be considered in the subsequent financial year. So in case of delivery-based settlement, in case of derivative transaction, difference between the trade price and settlement price will also be considered as a turnover. And in case the transferor of underlying asset, the entire sale value will also be considered as a business turnover, where the underlying asset is held as stock in trade. So in case of stock in trade, you have to consider the wholesale value as a turnover. So here I have taken the example, like option bank Nifty option has taken. Buy quantity is 30. Buy transaction value is 13,954. Sale quantity is also 30. Sale value is 23,745. So here profit is coming 9791. So while calculating the turnover, we have to take the absolute amount. So absolute amount will be 9791. However, if you see the subsequent transaction, which is Bank Nifty 27th March 2025, 51,600 exercise price, in the strike price, in that the transaction total buy value is 29,086 and the sale value is 70,465. So here loss is coming 11,621. However, while calculating the turnover, you have to consider the absolute amount. So you have to ignore the negative or we can say minus sign to that figure, and you have to consider the 11,621 as your turnover. So by doing the addition of this, you will work out the turnover. For in this case, for this multiple transaction, the turnover is coming 29,833. So in general parlance, what we do, the sale value which is given in the, we can say, fifth column, that is 1,22,656, is the, in case of normal business transaction, we take the sale value as the turnover. But in case of the derivative transaction, you have to consider the absolute amount of favorable and non-favorable transactions. So whatever the profit or the loss which you are incurring in that derivative transaction, that number you have to consider and not the particular sale value of the transaction. So accordingly, this here the 1,22,000 will not be your turnover. However, 49,833, that is plus and minus whatever the profit you are deriving or loss you are deriving, that figures amount in absolute terms will be your turnover. And in that case, now there are two options for taxation that I will cover in subsequent slide. For calculation purpose, I have given that you can disclose that in normal tax also by showing as a normal business tax. Then whatever the slab rate which is applicable will be taxable on the net profit or loss. Or you can also go for a presumptive taxation and go for the at the rate of 6%. You can work out the presumptive income that will be based on your turnover. So 6% will be work out on the 49,000 and tax will be 598. So any questions here in case of turnover? Hello.
Hello. In case of delivery-based settlement, as you have told, madam, you told that turnover will be sale consideration of the.
But that is particularly only in case of where the stock is held.
Stock is held, it will be the sale value.
Yeah.
Okay.
But that is for delivery-based settlement only.
Okay.
And it is as a stock because that particular person is holding this as a stock. So in that case, it will be the sale value, entire sale value will be considered. But in
Okay.
case of derivative, what happens? It is not our stock. This is the we can say
Yeah,
the underlying asset is we are trading for the underlying asset.
but
So
it is, yes, yes.
yeah, that is the difference we can say.
Thank you, thank you.
Yeah.
Hello.
Any more
Yeah.
doubts? Yes.
Hello, am I audible?
Yes,
Yeah.
yes.
Yes.
Hi, ma'am. Question is, SSC is a LLP firm
Mhm.
and it is a speculative transaction that is intraday.
Okay.
And now, as per income tax, the turnover is, as you have said before, it is the absolute profit and gain. That is fine with me. But while
Hmm.
maintaining the books of account, what should we
Hmm.
do for accounting purposes and drafting balance sheet? Should we in sale we have to write the sale value of that share, and in purchase we have to show the purchase value, or should we just net off and write out on the turnover as income tax difference?
So particularly, my first question is you mentioned that it is speculative transaction. So is this
Correct.
derivative or
Intraday.
intraday?
Intraday.
So intraday will be the normal, the sale and purchase you have to consider. And whatever the account, you have to follow the accounting standard for maintaining the books of accounts. But for tax purpose, you have to means you have to follow the tax rules, tax provisions.
Correct, ma'am. In case of LLP, what should we write books by sale purchase or net of difference only
No,
for
no. In
accounting purpose
speculative,
only?
it is normal transaction, so it will be sale purchase only. But this is not a derivative. Absolute turnover, which I am saying here, is applicable in case of derivative contract. It is not applicable for the sale transaction. If you go through my earlier slide, you will come to know that this turnover definition which is given the guidance for tax audit is for turnover of derivative. So this is favorable. Total of favorable and unfavorable differences will come only in case of derivative transaction. So it will not come in case of the speculative transaction. So
Okay,
for
for
speculative
intraday,
transaction, the sale value of that as whatever the underlying security,
that is
that will
equity
be
only.
considered.
Okay,
Sorry.
ma'am. Thank you. The underlying asset is equity shares only.
Yeah, but in that case, it will be a normal sale transaction. So
Oh,
this definition will not apply for the speculative
okay,
transaction.
this is only for options and
Yeah, this
future
is
intelligible.
only for future or option contracts. In
Okay,
case of
while writing
derivative,
the books, we have to write sale, purchase, and profit and loss account normal. And for income tax, we have to write the net off.
yeah, yes.
So there will be difference in turnover as per books and as per income tax. Then what should we do?
Yeah, but in that case, it is means defined in the tax income tax act only that how to determine the turnover. So we have to refer to that. For example, in case of company also or in case of normal individual also, we prepare the books of accounts as per the accounting standards, and then we have to again calculate the taxable profit as per the income tax provision. So whatever the allowances, disallowances, we have to remove that.
Yes,
For
ma'am. But
example,
there
if
will be
some
automatic.
transactions are there on which TDS is not done, or in case the expenditure has been incurred for non-business purposes, or which is not allowed under Income Tax Act. So in that case, we disallow that transaction for income tax purpose. So in that case also there is a difference, but we prepare the reconciliation or the computation of income where we mention whatever the allowances and disallowances which is given. Even some of the additional allowances are also given under Income Tax Act, which is not there in the books of accounts. Even there is difference in case of the depreciation. Depreciation as per books of accounts is different. Depreciation as per Income Tax Act is different. So that
Correct,
will be
ma'am.
there.
But that is the reconciliation of profit and loss account. But here, our turnover will not reconcile because the method of accounting is different.
Yeah,
So it is very difficult to satisfy the AO regarding this. We have calculated sale and purchase in income tax for accounting purposes, and while filing the return, we have taken difference absolute.
no.
So
So
the
Yeah,
You understand? This will always be non-reconcilable.
no, it will be reconcilable because as you can see here, as you can see here, the buy and sell value will be there, profit and loss will be there, and you are working out the absolute turnover based on the provisions given in the Income Tax Act. So you can very well give the reference of the income tax provisions, and based on that you have worked out this turnover. You can mention that, and even if you go, if you check any of the we can say reports which is given by Zerodha or the HDFC or any kind of the security market, particularly Zerodha mentions the turnover as per
That's right.
income tax law only
Income tax
in case
only,
of
correct.
derivative transaction.
Okay, ma'am.
Yeah.
Okay, any more doubts, anyone, before we move ahead?
Yeah, yes.
One minute, 1 minute. No more doubts, we can move.
Okay. So we also have to refer whether maintenance of books of accounts is required in case of the derivative transaction. So for that, you have to go to section 44AA of the Income Tax Act. So particularly in case of individual and HUF, if the income exceeds 2,50,000 in a financial year or turnover exceeds to 25 lakh, in that case, they have to maintain the books of accounts. So you have to check the income or the turnover threshold, whichever is applicable. So in case of other than individual and HUF, the threshold limit is different. For income, it should be 1,20,000, more than 1,20,000, and the turnover is more than 10 lakhs. So in case of company, LLP, HUF, artificial person. So in this case, AIU, BIU, you have to consider this limit, that is 1,20,000 income limit, and the turnover limit is 10 lakhs. Eligible assessee who has opted out of 44AD, that is presumptive taxation. In that case, if his income exceeds the maximum amount which is not chargeable to income tax in the previous year, so the slab which is mentioned, if it exceeds the slab, then it will have to maintain the books of accounts. So you have to maintain the books of accounts and other documents so that the assessing officer can compute the assessee's total income in accordance with the income tax provisions. And this income and the turnover threshold, which you have to check, is for the previous 3 years. Or in case of the new business, it will be first year, for first year only. So if any of the previous 3 years, if it exceeds the income limit or the turnover limit, you have to maintain the books of accounts. So I'm not covering maintenance of books of accounts as per the accounting standard because we are considering here the tax aspect only. So for that, you have to refer to the guidance note is also issued by the CA Institute for maintaining the books of accounts in case of derivative transaction. So what are the types of trades which are there in the derivative and how the income will be classified? It is for that particularly business codes has been mentioned. So in case of the future and option, you have to use the business code 21010. That is in case of the normal, it will be treated as a normal income from business and profession. So, and as we mentioned earlier also, it is the future and option transaction or the derivative transaction is the non-speculative transaction. So it will be normal income, normal business income only. Intraday trading will be covered in the business code 21009. So it is the speculative income from business and profession. And in case of delivery based trades, it will be chargeable under the capital gain, short term or long term. So applicability of audit is covered in section 44AB. So as you must be aware that the tax audit will not be applicable in case the turnover is less than 1 crore in a financial year, in the preceding financial year. If it exceeds the turnover is exceeds 1 crore, then you have to check the cash payments or cash receipt limit. If it is more than, if the cash payment or receipt is more than 5%, then the tax audit will be applicable. If it is not, it is below 5%, then tax audit will not be applicable. And in case of the turnover between 1 to 10 crore, if cash payment is, as we mentioned, up to 5%, then tax audit will not be applicable. And in case of turnover more than 10 crores, tax audit will be applicable. So particularly, you have to check the percentage of cash payment and receipt also. And in case you are opting for 44AD and you have opted for 44AD, and after 1 or 2 year, you have opted out of the 44AD, that is presumptive based taxation, then and your income exceeds the maximum amount which is not chargeable to tax, then the tax audit will be applicable. So you have to be careful while opting the presumptive taxation under 44AD. So, what is the presumptive taxation? It is.
Can I have a doubt?
Yes, sure.
Madam, as you have told, books of accounts have to be maintained. For example, if an individual who is trading in only derivatives, and his books of accounts have to be maintained as per 44A.
Yeah.
So in that case, if a balance sheet has to be prepared, so actually the turnover what we'll take will be the absolute value.
Yeah, yes.
But when we have to prepare a trading P&L account, just please correct me whether the total purchases will be taken as purchases and total sales will be taken as sales and the profit will be derived. Is it correct? Is it the way it has to be maintained?
Means frankly speaking, I have not gone in depth with respect to the maintenance of books of account as per the accounting standards. But here the turnover which you have to consider is as per the Income Tax Act.
Yeah, turnover will be
Not
done
as
as
per
per
books
the
of
Income
account.
Tax Act.
Yeah.
But when we are filing the ITR, we have to mention the figures in the P&L account and all that, right?
Yeah. Then you have to mention as per your books only.
Okay. The books also you're telling you're not aware of that accounting.
Yeah, because that is also very big. We can say we can take another 1 hour session.
Okay.
Books of account. So that's why I have not covered here.
Okay, sir. Thank you.
Yeah. So whether you opt, as we mentioned earlier also, that the derivative transaction is treated as a normal business income. So whether you go for taxation as per normal business income or whether you opt for presumptive taxation, that will be decided based on whether the that assessee is having the loss or is having the profit, whether in future what will be the scenario, whether it will be having in the profit or having the loss. Based on that, you have to choose whether you go for the normal business income or a presumptive taxation. So presumptive taxation provisions we will cover under section 44AD. So the assessees which are eligible for presumptive taxation under 44AD have to disclose their income, presumptive income, which should be 8% or 6% of the turnover or gross receipts of the assessee in the previous year. So eligible assessee is covered is individual HOF partnership firm who are resident. So particularly this provision is applicable in case of resident only. So non-resident is not eligible to opt for the presumptive taxation under section 44AD. And but not a limited liability partnership firm. So here particularly individual HUF and partnership firm is only covered. So LLP is not covered, and who has not claimed the deduction under section 10A, 10AA, 10B, 10BA, or the deduction under section chapter 6A and heading C, that is deduction in respect of certain income. So these are the eligible assessee. And 8% and 6% threshold is different basis on the whether you are doing the transaction through banking channels or through non-banking channels. Based on that, the beneficial rate of 6% will be applicable. So if your gross receipts or turnover is through the banking channels only, then you are eligible for the lower percentage, that is 6%. So this will be income under presumptive taxation. And the presumed eligible businesses, here it is mentioned that only the eligible business can opt. So eligible assessee is the HUF, individual HUF and partnership firm, and who are not claiming the specific deductions which is given here. And the eligible businesses are the businesses who are not into buying, hiring, or leasing, which is covered under section 44A, and whose turnover does not exceed 2 crore rupees. So the above limit of 2 crore will increase to 3 crores in case it in case the aggregate amount received in cash. Again, banking, if transactions is through banking channels only, and the turnover cash transaction is not in excess of 5% of the total turnover or gross receipts, then the turnover limit will be 5 crores. And you must opt for a presumptive taxation for a continuous period of 5 years, consecutive years. So if you opt out of the presumptive taxation and your income exceeds the basic taxable limit, then you have to maintain the books of accounts and also do the audit. Tax audit will be mandatory in such a case. So because of this provision, you have to be very careful whether you have to opt for a presumptive taxation in case of derivative transaction, or you have to disclose this as a normal business income. Because in sometimes what happens that in one particular year, in one particular financial year, there is huge profit. So if we pay the tax on that profit in case of the normal business, that is normal slab rate or tax rate applicable, then there will be huge tax liability also based on the turnover. But in case of net profit, but in case in future or the next subsequent financial year there is a loss incurred, then you can set off that loss with the subsequent financial year profit. But however, if you opt for a presumptive taxation in the first year, that because of the higher profit which is coming because of the derivative transaction, then in the subsequent year, even if you are having the loss, you cannot opt out, or if you opt out, you have to go for the maintenance of the books of accounts and audit. So these consequences will apply. In case of normal business, you can, in the subsequent financial year there is a loss, then you can set off that loss in the against the profit in the subsequent financial year. But that will not be possible in case of presumptive taxation. In case of presumptive taxation, even there is a loss in the subsequent financial year, you have to pay the tax on your turnover, which is at the rate of 8% or 6%, whichever is applicable. So this is the based on your client scenario, you have to decide whether you have to go for a normal tax or presumptive tax. So what are the expenses which is allowable? As the income from future and option is the normal business income, so you are eligible for certain kind of the expenses which are allowable under the Income Tax Act. So particularly the expenses which are direct and exclusively related to the trading business are allowed as an expense under the Income Tax Act, particularly brokerage, then any charges, security transaction tax. So in case of a normal delivery based transaction, like which is taxable under capital gain, STT is not allowed as expense. But in case of future and option, STT is allowed as expense. So you can take the benefit of this in case of future and option. Any commission paid to the broker, then if you opt for any trading journals to get the knowledge about the future and option business, or any kind of supportive trade magazines you are opting for, then you can also take the benefit of deduction of income tax for that. And also telephone, internet cost. If you borrowed any money for particularly doing this business, then interest on that borrowed money is also allowed. but it should be exclusively for that future option trading purpose only. Uh, if you opt for any professional services from any of the brokers or consultants who is giving you the particularly the we can say technical knowledge to opt to trade in case of the future option, then professional advisory fees also allowed as a expenses. Uh, Regular admin expenses like the rent, depreciation, such kind of expenses are also allowed, and the whatever the miscellaneous trading expenses which is directly related to the future and option trading is allowed as expenses. So particularly whatever the expenses which is directly related to your business is allowed as a business expenses. So if some kind of expenses are common, so you are using that service for your future option also, and also for your normal other business, then you have to proportionately take the benefit of the expenditure. So based on your turnover, you can determine how much is the eligible expense and you can claim that. Only thing is that you have to keep the proper documentation for that.
Ma'am, I have a question regarding this.
Yes.
I have a scenario that one person is doing job in he is filing ITR in salary head, but he also doing that F&O trading. He has a loss of 4 lakhs or approx 4 lakhs, and he decided to not to do in future F&O. So can he not file in ITR 3? Can he file to ITR 2? Is it okay? Not showing loss of F&O.
Yeah, it is okay, but if we show the loss, he will be eligible in future to set off that loss against the other income. So that a point I'm covering here. So except the salary income, you can set off the future and option loss with the your other incomes.
Okay.
Yeah.
So if he does not decide, he decided not to do in future, it is okay for that.
Yeah,
For
it is okay because it is ultimately the assessor's call whether he want to take the benefit of loss set off or no, not. Because income tax department will be much happier in this case that the assessor is not claiming the loss.
Okay.
Yeah, actually this is the favorable position for tax department, and we can say unfavorable to the assessor.
Okay, thank you, ma'am.
Yeah. Only thing is that you have to file your return for loss before the due date if you want to claim the loss in future.
Okay.
Yeah.
Now he can revise the idea if he want to do?
Yeah, but this is for which financial year? 24, 25?
Yes, it's 24-25.
Yeah, very well. If it is revised return filed within due date, then it will replace the original return and he can claim the loss.
Okay.
Yeah.
Thank you, ma'am.
Yeah. So as we discussed, the losses from future and option can be set off against any income. Exception is the of the salary income, and it can be carried forward for 8 years as the normal business loss only. Only thing is that you have to file the return um, in the year in which you are incurring that loss. In that year, you have to file the return before the due date. Then only you can carry forward that loss and set off against the future income. So it can be losses can be carried forward for 8 years, and it can be set off against business income except the non except the speculative business. So in normal business loss, you cannot set off against the speculative, and so you must be having question whether the tax rate is different for the future and option. So as we discussed, it is the normal business income, so there is no special tax rate which is applicable. It will be the normal slab rate which is given for the individual or HUF will be applicable. And in case of LLP firm, it will be the applicable tax rate, that is 30%. In case of company, it is the beneficial tax rate, that is 22% under new regime, or you can go for the normal tax rate, that is 25%. Only thing is that you have to pay careful while opting for the new regime, because section 115 BSE gives the option to the assessee who is into business, who is having the income from business and profession, to opt for the new scheme only once. So you can go to the old regime only once in a lifetime. You cannot, like in case of the salary income, you have having the option to choose between the old tax regime or the new tax regime every financial year, but that option is not given for the businesses. So in case of income from business and profession, you have to choose whether you have to go for the new regime or old regime. And for that, if you are opting for new regime, you have to do the particular form filing if you are opting out of the new tax regime. So which ITR will be applicable? So based on whether you are going for the filing the income as a normal business income, or you are opting for the presumptive taxation, based on that your ITR applicability will differ. So if you are opting for presumptive taxation, then you have to file ITR 4. So you need not maintain the financial statement, and tax audit will not be applicable if the profit is less than 6% or 8%. But if you are disclosing the profit less than 6% and 8%, then the tax audit will be applicable. And in case of normal business income, it will be ITR 3 will be applicable, and you have to prepare the financials and share the what profit on loss and also the balance sheet figures in the financial in the ITR. Particularly books of accounts maintenance, you have to refer to the income limit and the turnover threshold, which is given in 44A. So you have to fill schedule profit and loss and balance sheet as per your books of accounts. You can fill out these details. So one example I have covered here, that is the gross future and option turnover is 22 lakhs. The net profit from future and option is 1,20,000. You can take the benefit of the allowable business expenses, and net income you can disclose, that is 1,20,000. And let's say 20,000 is the expenses, and so your net business income will be 1 lakh. And you are adding also the other income, that is income from salary. So the gross income will be 7 lakh. If you are opting for the old tax regime, you can take the deduction under ATC, and then you can work out your taxable income. So what are the documents required to file the ITR? Particularly contract note, broker ledger, statement of open contract and completed contract, tax audit, profit and loss statement, capital gain statement, bank statement, 26AS credit statement, because we have to also do the reconciliation between the 26AS, whatever the transactions disclosed in 26AS, and as per our books of accounts, you have to do the reconciliation. Also, the basic details like PAN, other bank details is required. Also, check out the AIS and TIS because your income should match with the AIS TIS. And if you are claiming any expenses, then also keep the record of whatever the bills or the tax invoices which are there against the services which you have received. So this document need not be submitted at the filing the ITR, but it is better to keep this kind of documents in your record. So in case in future any assessment is come up, then you can very well present these documents to the assessing officer, and it will be readily available. So I think I have covered all the topics. So thank you very much.
Yeah, yes, Sapnil ji wants to ask something. You can unmute yourself, Sapnil ji. Yes, Swapnil ji, you can unmute yourself. Okay. Swapnil ji, you have raised your hand. Acha.
Ma'am, I want to ask one thing.
Yes,
Yeah.
yes.
Like I asked for the regarding the offender,
Hmm.
I have a loss of 4 lakh. I have not shown in the ITR, but
Yeah.
in same I want to revise the ITR. But in same scenario, that I my in my AISTS report, it's shown the TDS of on rent
Sorry,
in
I
rent.
didn't get your question.
I want to revise the ITR.
Mm-hmm.
But in same scenario, on my 26 AS, it's
Mm-hmm.
shown that TCS I have collected on rent. TCS receivable on rent, I have shown approx 2.5 lakh, 2.5 lakhs approx on IDR. I have shown on the IDR.
Okay.
But unfortunately, it's of my friend. So can I revise and can I remove that rent? Is it
But
possible?
if it is pertaining to some other assessee, then why it is showing in 26 years? That is the first question.
He used my PAN card to show
Okay,
on.
but in such kind of scenario, you have to disclose that income. Otherwise, this kind of question will be asked in future. If the assessment is done by the assessing officer, he will surely add back that income in your ITR and will also ask for the penalty.
Okay.
Yeah. So I think this kind of scenario should be avoided. You have to do means you have to particularly should not allow your other assessee to use your PAN for
It's
his
the first time I have
transactions.
used a computer as on. I have denied for that.
Yeah, but for the particular financial year, you can ask for the compensation from your friend that this is the tax liability which is applicable because of this income. So you can get that tax from him.
Okay, thank you.
Yeah.
We have one doubt in the Swapnilji's doubt in the chats also. I want
Yeah.
to ask if the income in the AIS and bank statement
Hmm.
does not matches, then what can we do if the difference is about 10 lakhs?
But you have to reconcile and you have to check what kind of income is not there, like is it the situation that you have disclosed that income in last financial year, however the TDS has been done in the current financial year, so because of that there is a mismatch, or is that the situation that that transaction is not altogether pertaining to you, someone has just used your PAN as mentioned by Chirag, that they have used your PAN and they have disclosed it under your name. So that kind of reconciliation you have to do, and you have to keep that ready with you, the reasons for whatever the differences is coming. Because in future, the assessing officer will definitely ask that this is the income pertaining to you as this is mentioned in your 26 years. So you have to reach, if the wrong information has been disclosed by the deductor, then you have to mm, contact the deductor and ask for the explanation, and you can ask them to revise their TDS return if it is not pertaining to you.
Yeah, okay. So Swapnilji, if you want to have any further doubts, you can unmute. If I respond to the demand on portal, then how many days it takes time to resolve? There is one doubt, subsequent doubt. If I respond to the demand on the portal, then how
Mhm.
many days it takes to resolve?
Demand on portal, which portal? Income tax portal?
Yes, I think so. Yes, yes.
No, you in that case, it is based in the assessees as per the tax provisions. There is a limit which is given for issuing the notices. That limit will applicable, and in case of in case of the scrutiny assessment, you have to give the satisfactory response to the assessing officer. Otherwise, he will add back that income and will do the assessment and complete the assessment. So you have to respond within the time which is mentioned by the AO.
Okay, any more doubts? Okay. I don't think so.
Ma'am, my question is, if my turnover is exceed from 2 crore, then audit is mandatory.
Yeah, if it is not with through the banking channels, the limit of 5%. So if the cash payment is more than 5%, cash payment or receipt is more than 5%, then tax audit will be applicable. But if it is within the 5% limit, then it will be not applicable until the turnover doesn't crosses the 10 crore limit.
Okay, thank you. And
Okay.
advanced tax? Advanced tax?
For
And
advance tax, the limit is 10,000, tax liability of 10,000.
if my profit is exceed 10,000, na?
Not profit tax.
No profit tax liability.
Okay.
Yeah.
Okay. So any more doubts, anyone? No, I don't think so. So
Ma'am, what is the business code of F&O of reported in ITR?
So I have given this in presentation. So I think after
So
this
90289.
21010, because this is the new code which is introduced in this year only.
Okay, okay.
Earlier the code was different, but now particularly they have given the separate code for future options. So you can use that 21010.
Okay.
Yeah.
okay, that's nice. Please share the PPT. Nice deliberation. Yes.
Yeah.
Okay, so I
May I
think
have a feedback? Means, is this
So,
useful for you? Is this
undoubtedly,
adding
ma'am,
value?
undoubtedly,
Okay.
undoubtedly.
so sorry to interrupt. I had a small query, if I may
Yes,
ask.
yes, 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 yes.
So actually, it's not specifically related to today's topic. It is a more of a practical or operational query.
Mhm.
So, ma'am, has there been any change regarding calculation of 234 ABC? Because, ma'am, of recent from last previous year and this year also, I've been noticing that in the 143.1 in the intimation, there
Mhm.
has been differences in the department's assessment of 234 ABC, whereas I have multiple times I have checked my calculation. It was as per act or as per what is required. Even I've
Mhm.
used income tax portal's own calculator also and other softwares also. But for
Okay.
some reason, the calculation as per 143 intimation are a bit different, and there's no option to get the details of how they are calculating.
Actually, we have also observed such kind of differences, but in that case, you have to file the rectification application with the income tax department, and through rectification, you can do the correction in the whatever the interest difference it is coming under 234 ABC.
Just to clarify, so this is not a me specific issue. This is a generic issue.
Yeah, yeah,
There
it
are
is
other
general
issues also
because
there, right, ma'am?
in some of the our clients also we have noticed that. So in such kind of scenario, we used to file the rectification application.
No, actually, I had the same query. I wanted to, but considering the quantum of difference and the risk associated to it, no one, actually, the client or no one wants to take the risk. So that's why I couldn't proceed or dig further regarding that. So I
Yeah,
just
but
wanted to confirm.
yeah, rectification is not a risky matter. So you
Mhm.
can go for the rectification if there is difference and it is legitimate.
Okay, so in that cases, department does accepts its calculation
Yeah,
mistake
yeah,
and
yes,
rectifies it.
yeah.
Okay.
Department accept the calculation.
And ma'am, just a second question, ma'am, regarding again 44, the presumptive taxation, ADA or ADA, ma'am, as you
Mhm.
said, like in a particular scenario, if the SSE is having a higher profitability and doesn't want to declare that much or pay according to taxes accordingly, you could
Mhm.
directly take up one for the you can accept adopt for AD, and thereby directly pay 6% or 8% accordingly taxes on it. So
Mhm.
a simple query I had, ma'am, is that irrespective of a bank in cash balances also? Because if I directly
Mhm.
try to declare a 6% profit margin, whereas my actual profit margin was maybe a 15 or 20 odd percentage, so that wouldn't match with my bank statements or sorry, my broker ledgers or bank statements. So how
Yeah,
would
but
that play? Because
But that is what the presumptive taxation is there, na? Because you are no need to maintain the books of accounts, and you can just go for, you have to just be sure that you are declaring the correct turnover. Your turnover should be correct, and based on your turnover you can work out the presumptive income 8% or 6%, as whether you are going, means whether the transactions are through banking channels or not. That is the beauty of the presumptive taxation, that even if you are earning the higher income, you can go for the lower income through presumptive taxation. That is also we are doing in case of the professionals. We are also taking the benefit of 44
But ma'am,
in
in those cases,
EDA.
we do take care that the bank or the cash balance accordingly substantiate that particular claim. But in
Yeah.
case of shares or FNO of security transactions, because since a brokerage is involved, so substantiating that along with the cash or bank balances would be rather difficult than a normal business or a normal profession.
No, but we can say it is quite safer for future and option, because all the transactions are through banking channels only. For trading, in case of the future and option, you have to do the transaction through banking channels. No one does the transaction through cash. All the payments gone from your bank account only. Only in case of expenses, you have to check whether these transactions are through banking channels or not.
Okay, okay,
Correct,
understood,
no?
ma'am.
I think. Yeah.
One last doubt in the chats. If the refund is adjusted against outstanding demand, and if I give the satisfying response on the portal, then the refund will be credited to my account.
Yeah, as I said earlier, also satisfactory response is through rectification only. So, if time permits, if it is within 4 years, you can go for the rectification under 154. You can file the rectification. Otherwise, if case is selected in scrutiny, then you have to prove whatever the demand. You have to, first of all, you close that assessment, particular assessment demand, and then only that rectification can be possible.
Okay. Okay, so it's more than 1.5 hours almost. It's anyone any doubts? There are messages, ma'am, very useful and meaningful. Thank you for the session.
Yeah,
Nice
thanks.
deliberation. Anyone who wants to add about the session, what they have learned or something they want to say
Yeah.
apart from doubts? Anyone, please? Anyone? Swapnil ji is in. It's happened in any case. The demand raised by department is wrong. Yes, it may happen. Then, as ma'am is saying that rectification needs to be filed.
Yeah.
Okay. So anyone who wants to say feedback about the session?
Yeah, session was very good, very useful. If you can give the both PPT as well as video link, it can be very useful for
Yes.
revisiting on some of the points.
Definitely, you will get the board. Don't worry about the recording. All the recordings are properly available. Serially, we are uploading them. Okay, very informative session. Thanks to madam for such a wonderful deliberation. Yes, ma'am. So finally, we'll wind up each and every definition and everything so clearly explained with examples. Thank you so much, ma'am. Thank you so much. Definitely,
Yeah.
there are so many messages in the chats that it is very informative session. So thank you so much, ma'am. You have given so much of time and efforts for this. Okay.
Yeah. Thanks for giving the opportunity.
Okay. So we'll wind up. Thank you so much. Good night, everyone, and stay updated in the group. Those who are not in the group, just 1 second, I will send the link of the group so that you can stay updated for further sessions. Okay. I am giving in the chats. Just 1 minute, copy link.
I had
Last doubt,
recently got
please.
added into the group.
Yes, sir.
I did not actually know about this session, but since I saw the live is now, I could
Okay.
join. Whatever scheduled sessions are there, maybe once in a day in the morning or something like that, you can give the list. These are the scheduled sessions which are yet to happen.
Yeah,
That
okay.
can be
Also, I
very
have
useful.
given the link in the, the So, okay, I've given the please resolve my doubt. Which doubt, sir? You can unmute yourself. Swapnilji, please unmute yourself. So it is better. One by one, you are asking. I think ma'am is already. Please unmute yourself, Swapnilji. Which doubt? I have taken all the doubts. Swapnilji, and my mic issues. Acha. Okay. Wait, let me check. Ma'am, you are there?
Yes.
Okay, I think there is one doubt. Let me check. Give me 1 second. Most of the client refund is not credited till now. The ITR is showing under process. How many days it takes the credit refund?
Yeah, particularly the department has, in this financial year, has kept the refund on hold or the ITR processing on hold in case they're having the doubt that excessive claim has been done or the wrong claim of income or loss. In such kind of scenario, government has kept this on hold, but by end of December, I think they will process it. Or anyways, before 31st March, income tax department has to process the.
Yes, I also read one notification. It was telling December only.
Yeah,
So
yes.
let's wait till December. Till then, I think some this condonation or something I forgot that also filed for one of my client. Then the refund was issued immediately. Not condonation. I forgot what I did. I this one I forgot what I did, but immediately it was refunded. Anyways, we'll wind. So thank you so much, everyone. Thank you to all the participants. Thank you to ma'am for such a wonderful deliberation. And I've given the chats in the link in the chats, so you can join the group. We are having upcoming sessions also. Today's 51st session. We are going to do till 100. Okay. So thank you, everyone. Good night. Thank you so much, ma'am.
Yeah,
And thank you
thanks.
to all the participants.
Yeah, I'm sharing my LinkedIn.
Yes, ma'am, please. Also, we
Yeah,
will share in the group also, but you can share your LinkedIn ID in here also.
yeah. Okay, so that everyone can means in PPT also I have given my LinkedIn ID.
Yes, yes. And
So,
anyways, we share the link to connect with the speaker, all this LinkedIn ID and everything after the group, after the class in the group also.
yeah.
So, okay.
Yeah. Thank you.
Okay. Thank you so much, everyone. Thank you so much. Good night.